on Wall Street, 3 major indexes finished lower for the month. 10 out of 11 sectors in the S&P 500 were in the red. Energy was the only sector finished higher. At the same time, the tech giants lost their shines due to jumping bond yields, which sparked risk-off sentiment. The mega caps such as Apple, Microsoft, Tesla, and Meta Platform all had negative close for the month. Investors rebalanced their positions amid macro changes, given re-elevated inflation, jumping energy prices, and Fed's hawkish stance for higher for longer rates. NVIDIA's shares hit a record high following the stellar earnings result. The AI chip maker's revenue jumped 101% year-on-year in the second quarter, and the guidance point to a 170 surge in the sales revenue for the current quarter. However, the blended quarter two earnings in the S&P 500 company posted the biggest decline since the third quarter 2020. Despite most companies beating market expectations, the market is punishing positive company earnings, according to FactSet. Wall Street correction may continue in September if inflation stays sticky. Hence, upcoming August CPI data will be critical for clues of Fed policy path. The Fed September rate decision will be a critical event for sentiment and the market trend. The ASX 200 finished lower in August amid Wall Street retreat and China's economic jitters, and the mixed company earnings result also added to the volatilities. On the economic front, the weaker than expected July CPI data strengthened the odds for the RBA to continue suspending its rate hiking cycle, offering a rebounding opportunity in the ASX for the last few days of the month. In the sector performance, 9 out of 11 sectors finished lower for the month, with consumer discretionary outperforming, as Westfarmers shares jumped about 7% in August after posting record earnings for financial year 2023. The retailer owns brands like Kmart and Bunnings, suggesting consumer spending remained resilient. On the other hand, Core Lithium was among big losers dragged on the material sector. The mined shares plunged about 40% for the month on an announcement of 100 million placement at an offer of 40 cents per share. Also, the big miners like BHP and Rintato also disappointed the market with the full-year results. Notably, gold miners such as Gold Road Resources and Silver Lake Resources outperformed with the shares up 8% and 12% respectively due to a jump in gold prices. In the new month, the RBA's rate decision, the Australian second quarter GDP, and the monthly CPI data are the economic focus. Rebounding opportunities could be seen in September if the CPI data paves the way for an end of the RBA's rate hiking cycle, and China's economic playout will continue to offer clues for Australia's mining stocks. If you like my video, please subscribe to the channel, and I wish you a great month ahead.